Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it baby bubble, and I stole that term from someone. I'll talk about that in just a minute. But first, we're going to start off here looking at the side-by-side view of the industrials, the S&P 500 and the Nasdaq 100. The Dow was up 669 points this last week, so it's really interesting that here when we had a chance to break down here this last week, we didn't get it, and it came back up. And of course, the Dow was up strong on Friday after the jobs report came out. So watching as key levels, watching this prior high from April 30th, and then of course the December 13th intra-week high. It'll be interesting to see, do we stay down, do we roll back over, which we had a chance to do this last week, or do we keep pushing higher? The S&P 500 was up 77 points. Big strong move, and then we have the Nasdaq 100, which has gone ballistic since the first of the year, and it was up 248 points. So along that theme of the Nasdaq 100 going up quite a bit, let's just take a look at where the baby bubble comment came from. I came across this tweet from Jesse Felder. He talked about this article that was in Bloomberg, and it says, a baby bubble in AI was the dominant market theme in May, strategist Michael Hartnett said, with tech funds attracting a record $8.5 billion in the week through May 31st. A pretty interesting article here on Bloomberg. It came out, I'm not sure actually when it came out, this last week, a few days ago, I think. But interesting chart that we have in here in terms of the record weekly inflow into tech funds. It's like nothing we've seen before. And of course, we've had our bubbles. And so here we've got another one. And then another interesting chart that I came across, I think this may have been from the same article. It came out of Bloomberg. We're talking about this. We're comparing the Nasdaq 100 to the Russell 2000. So we're dividing it as a ratio, the Nasdaq 100 divided by the Russell 2000. So you see this peak that happened back over here in 2000. And here we are. It's like I titled this, for my own edification, here we go again. And here's where we sit at, a new record ratio against the Russell 2000, right where we were back in, 23 years ago. So going to be really interesting to see where this market goes over the next 6 months and over the next couple of years. So that's where we sit with a side-by-side view. Today, I'm going to look at the Russell 2000 IWM and look at the price activity. Look what it did on Friday. Up 6.37, huge explosion. It just gapped up at the open and just continued to push higher. It was up 5.87 for the week, but 6.37 on Friday. So, talk about salvaging the week on Friday. And that seems to be happening a lot lately. It's like the market's been, stalls out, 2 or 3, 4 days during the week, and then all of a sudden you get an explosion that recovers it on Friday. So kind of interesting price action going on. The Elliott Wave count that I've got on the Russell 2000 ETF IWM is this. Let me get this lined up a little bit better. Here's the weekly view. I think that we are in intermediate wave 3, and right now I think that we've had wave 1, minor 1 down, and we're doing minor wave 2. These are just placeholders, just a path forward. Everything is linked together in the software. So right now my focus is on this. I need to get wave 2 complete, and then we'll project where we think everything else is going. But we've got major support down here on IWM. The June and, September, October lows, I've got them all kind of, grouped together. This is a major support level. We break that, is going to be like the dam busting. So this trend line that connects that October low to the December low back up here, we broke down through that trend line in March, snapped back to it in beginning of April, and now it looks like we may be making another run to it. Okay, so I think the move that's going on, this has been very messy. Look at the up and down sideways type move that's been going on here. So I think we're in an ABC. But the type of form that the C wave is taking, a C wave in a zigzag like this is typically needs to be either an impulse or an ending diagonal pattern. So if I had to say, what does this look like to me? What looks like it's developing into? It looks like an expanding ending diagonal pattern. Now, just ignoring this in terms of the pattern, where do I think we're pulling up to? Well, here's when I look at 2 versus 1 as a ratio retracement, okay? Here's some levels. Here's 50%. Here's 61.8%. It's interesting how the 61.8% aligns with this extension of the trend line back out in here. And also, when you come over here, it looks like here's where we're going to get a bunch of resistance from where as we approach back up into that territory, because we broke down from there and we had traded around in that area for quite a while. So it's going to be, I think if we continue to push higher, I would have to say my target would be up here closer to 187 on IWM. Okay, the other thing I want to do today is just check back in on gold and silver. So, I'm working the bullish scenario on gold and silver. Here's what we've got in terms of what we're doing. Let's just look at the weekly view. For the longest time, I was bearish on gold, and then, I don't know, months ago, I turned bullish because the price action just refused to head down. So to me, the bull scenario is that it wants to go higher, but what it needs to do to really take off is break through this level up here on GLD, this 194 area, 194.5, 193 to 194.5. So right now we've been dealing with this pullback that we've got, and I've got it labeled as 1-2 in the move, and I think we're in the intermediate wave 3. So I think we have a little bit more to go before this is going to complete. And here's why I say that. When I look at the daily view, this looks like 3 and a 3, which is a flat. This is an expanded flat because the B wave went above the beginning of the A wave, okay? So a 3, and now we're getting our 5 wave move. This looks like 1, 2, 3, a sideways flat for 4, and then we need a 5th wave to come down here and finish off this C wave. And when that happens, I'll be looking for a turn. Okay, so this is what we're looking at. Here's some ratios. Here's C versus A when you look at the relationships. And here's 2 versus 1. So it kind of gives us some targets to be looking for price action reversing. All right, so that's gold. And silver is similar, but a little bit different. When I look at the weekly picture on silver, we broke through this long-term trend line, from the 21 high coming down here. We broke through that on, March, the week of March 26th. And then we pulled back to it. Now it looks like we may be, after a pullback, that we may be trying to turn in here. And I think we've gotten our 5 waves. We've got deeply oversold in here. And now I'm watching, we had a really nice push this last week. Friday gave some back. But I think there's a decent chance that this wave 2 has finished. Similar type pattern to gold, 3 and a 3 up here, and then getting a 5 wave move for C. And so now I'm watching to see, do we continue to push higher? Do we, come up, take out these highs, the April, May highs in here? That is the pattern I'm looking for, and that's my take on gold and silver. Okay, that's it for this week. We'll see what kind of price action we get this following week. Everyone have a great weekend. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like to have more of this information on a regular basis, head on over to joehenches.net. Check out the website, check out the membership. Everyone have a great week. We'll talk to you on the next video.